Good morning. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Well, another Monday morning and the market's a little bit soft. However, we need to keep in mind is the market is definitely in a confirmed uptrend. Last week we saw the NASDAQ hitting new highs, S&P 500 hitting all-time highs. We saw the Russell 2000, S&P 400 mid-cap hitting new highs, the S&P 600 small cap. So all these indices are moving much higher. Also, if we look at the S&P sectors, we see the financials that were lagging, also just right about at their highs. The consumer discretionary breaking out to new highs, as are the technology shares. So generally, we have a pretty much a bull market run. Now, when you're in this market, it's really not a good idea to start chasing any old stocks. You still need to continue buying stocks that are coming out of sound consolidations, and you don't want to chase anything because, of course, markets don't go up forever, and they do pull back. Now, if you're looking at the S&P 500, some of the important support levels should be at about 1730, then about 1710, and then about 1680. If we stay above those levels, this uptrend should stay intact. NASDAQ, 3900 is a new level. However, even if NASDAQ trades down 3820, the uptrend should still be intact. So keep your eye on those levels and keep looking at your individual stocks. Now, the themes in the market still appear to be everything related to the internet and Chinese stocks. Oil exporters are doing very well. Some of the biotechs are doing well. Some of the smaller ones falling by the wayside. So those are sectors you want to keep your eye on. Now, one of the plays we have for you is a drug company, Santarus. The symbol is SNTS. I've mentioned this one probably back in May. We were playing it back then. And the stock ran up to about $28 in August, and it's been correcting since. It looks like it's getting a lot of support right around the $21 level. And looks like last Friday, it did come up through its 50-day moving average on increased volume. So it looks like the buyers may be returning to this stock. Now, the reason I like the stock is over the last 8 quarters, it has triple-digit earnings growth every single quarter. Last quarter, earnings came in at an increase of 210%. Next quarter expectations are for the earnings to increase 153%, and the quarter after that, 300%. For the year, Santarus is expected to grow earnings at about 205%. And the revenues also continue to grow very well. Last quarter, they came in at 89%. We're looking at 72% for the next quarter and 41% for the quarter after that. And revenues are expected for the year to be an increase of 66%. So you see, we have a lot of strong earnings and sales growth. Profit margins are good. Return on equities at about 44%, and the debt's only at about 12%. Now, another reason I like this stock, over the last 8 quarters, we saw mutual fund sponsorship increase. And now, over the last years, you had about a 77% increase in the funds owning the stock. So the way you want to play this stock, as it's come through its 50-day moving average, it's trading right about 23.5. That's a pretty good place to get in, but you have to position size accordingly because it may retest that $21 level, and that's a pretty good percentage drop from these levels. And if it undercuts it, the trade may not work. But anyways, going forward, you might want to look at that trade, and of course, always use your stops. Let price and volume be your guide. This is George Kachuk, RCM Wealth Advisors, reporting you from the CME Group trading floor in Chicago. Have a great trading day and a great trading week.